Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. We're going to kick off our discussion with a look at the economic calendar. That's probably the big narrative for not just data, gang. We're taking a look at what's going on with earnings too. So I'm going to walk you through the two economic calendars that I look at the most. And let me get this trading view out of the way. There. Okay, that's fine. Trading view. We'll use some trading view charts today for our show. Love these charts. All right, so taking a look at what we've got for Tuesday. It's a pretty quiet morning. We've got core retail sales and a number of little 915 industrial production, cap utilization. Be careful. In about 14 minutes, we're going to see a little bit more data trickle in. But I'd say even though it's not listed as a red hot zone, FOMC member Barr will be speaking at 10 a.m. And while we already have the core retail sales number, we'll talk about the reaction to that in just a moment. Keep in mind that any FOMC speaker right now, and it's a funny engagement because remember, on the 26th, we have that meeting. So this is kind of interesting because we're right into that blackout period. It doesn't mean that the FOMC members cannot speak. It typically means they choose not to. And they're usually not going to make a lot of comments on monetary policy, but this is kind of cutting it close for that blackout period. Again, it's not that they cannot speak, they just typically won't. So keep an eye on that Barr event. We have the FOMC next Wednesday. All right, by the way, we are largely expecting that rate hike. So let's jump on over to an intraday look at the SPY and take a look. This is all pre-market. You'll see something similar on the S&P futures as well. But take a look at the 830 candle, right? This is the candle that reflects the way in which the market reacted to that retail sales number. And when we get a move like that, that tells you, all right, the initial reaction was to the downside. Notice I'm not talking about what the data actually was. I really don't care about the number initially. I'm looking at the reaction in price. Three places I'll look. S&P, right? The three places I'll look. S&P. I'll also look at the 6E, which is the easiest and frankly the most accessible way to look at the dollar, right? If you're looking at the 6E, you're looking at the Euro futures, which is the most unfiltered way to look at US dollar strength or weakness. And you might say, well, Rog, why not just look at the DX futures? Why not just look at what's going on with the DX futures or DXY? And the reason I will say don't do that is because remember that the DXY is still a basket of currencies versus the US dollar. 58% of the basket is the euro. So the best way to look at it would be through the lens of the euro, whether that's euro US Forex or whether that's the 6E futures. Obviously, dollar went up, euro went down. And then the last place I'll look is the long bond or the 10-year. At this point, if you look at ZB or if you look at ZN, it really is probably 6 of one, half dozen the other, whichever one you may like to trade. By the way, a lot of traders don't know that the IEF is the TLT alternative to the 10-year. The way we have TLT in the long bond, there's the IEF for the notes. It can be a little illiquid, but it's certainly something that's worth looking at. But again, what do we see? Just like the dollar strengthened, we saw yields go up momentarily, but it seems that we're already well within retracing that initial move. So let's see what kind of reaction we get after 9:30. All right. So as always, gang, if you have any questions, we will get to it. And let's see here. As always, if you have any symbols you'd like to take a look at, setups, time frames, questions for me, type them on in, and let's get to it. All right. A couple folks asking in our training room, does the bot ever sleep? Bots don't need sleep. They just plug in or they solar power. I think the bot's capable of both solar and plugging in. they do a quick reboot every night. Oh, that's hilarious. That's awesome. All right. So let's see. LMT, sure. Lockheed Martin. So let's take a look at Lockheed. Now, one of the things that we want to keep in mind, especially during this time of year, is whether or not we have earnings within a certain window, right? So let's see. Lockheed Martin questions coming from or comments coming from our training room. Let's go to the daily time frame. All right. So in terms of Lockheed, remember, gang, so this is the way that I look at earnings, right? I don't want to talk about earnings the day before. That's actually not as effective as looking at earnings 2 weeks out, 4 weeks out, even 6 weeks out from the release. So here's the release. This is going to be earnings, as you can see here, before the bell, and we can see pre-market. There we are. Now, realize this is where I'm not a fan of necessarily buying calls and puts into earnings. It's going to far favor the sellers of premium in this 2-week window as implied volatility goes up. Vol crush, even on a call. Imagine you bought a call yesterday, right? And today you're thinking, oh, this is great. We're going to open up near the highs. Vol crush alone is going to be a problem. What is vol crush? The volatility implosion, right? The value of that option. However, let's say rather than talking about Lockheed Martin, which I have no skin in the game in, but let's say rather than talking about Lockheed Martin today or yesterday, we say, gosh, what could I have done, say, a month ago? So we go back to June 18, right? And say, okay, we're 1 month from earnings. And so 18th was a weekend. So we grab the 16th or the 20th, doesn't matter. And we say, hey, what could we have done before earnings inside these two lines that I've just drawn? Take a peek. If I've got Darvis support there and Darvis support there, do you see how if I have a bullish bias on Lockheed Martin, which arguably I would if we've broken the 200, which we did, so I'd be slightly more apt to buy. Notice that we can play as early as Monday the 26th and as recently as, say, the 28th or even the 29th of June. Notice how much better positioned we are in front of the event outside of that vol crush window and not trading it myopically right into earnings with that tiny 24 or 48-hour window. This just works better, especially for directional traders, which is what I'm talking about, right? I'm talking about directional debits. Now, again, if you're a seller of options, that's not my jam, but yeah, I like the overall movement here, but I want everyone to kind of think upstream to the movement to, say, 476. What preceded it, a double test of Darvis around, as you can see here, 447, right? So that's about 30 points south of where we are now. And to me, I'm always thinking, what was upstream to where we are right now? Is this really a great setup, or is this the follow through from a setup that already triggered? So yeah, great observation. GDX, taking a look at gold here and GDX. So if I'm going to look at GDX, I'll start off with gold futures, or maybe take a look at GLD. Remember, again, gold is going to move based on an negative correlation or inverse relationship to real yields, right? So if real yields are ticking up, gold's ticking down. If real yields are ticking down, gold's ticking up. And overall, I think it makes sense to be bullish on gold, but it's far from a trend, right? It's far from a trend. Now, gold may not be a bad one to swing trade on a 60-minute time frame or even day trade on a 5-minute, but be really careful, gang. The best follow through on gold are those days where the GC symbol or GLD is tracking with ZB or TLT. When they're moving together, you're going to find there's typically better follow through. So yeah, good stuff. What about deer? What about deer? All right, let's go take a look at DE. And again, we have a trend on deer. Earnings are still far enough away that we could play buy the dip. So what I would say is we go into the earnings that are due Friday, August 18 before the bell. We have a month out. This is a great window, right? Now we can say, let's buy the dip. Let's buy some pullbacks and get long deer with the ambition to be buying the dips, taking advantage of that grind higher or that rally into earnings, that run into earnings, and getting out before earnings. That's always my approach. Play that 2-week, 4-week, 6-week window, especially in uptrends, and then get flat. In this case, we'd want to get flat Thursday, no later than Thursday afternoon. So definitely valid for buy the dip. All right, let's see. Next up is Trader Momo asks, what do I think of the opportunities in commodities based on Russia's move port blockade? Trader Momo, I will just look at the underlying symbols. So if you're talking about wheat, I'll just pull up ZW and see if there's a setup, right? Regardless of the news, regardless of the headlines, at the end of the day, getting long or short is never based on a headline, but a headline could be the trigger for increased attention or the trigger for an entry. So if there's a setup on wheat, then that headline might help that setup with some follow through. But what do I think of it? Frankly, Trader Momo, nothing, right? I'm not going to think anything more than, oh, cool. Here's a narrative that might increase a psychological response one way or the other. But then I'm going to still come back to this chart and say, hey, is there a setup here or not? Because that's where the setup, the trigger, the stop, the targets, that's where all of that comes from. So right now, maybe an oversold buy on wheat, but not much really clarifying despite the news, right? And a lot of traders think news is tradable, but I think news is simply a trigger for setups that should have already been, right, brewing before that. It's amazing how often news does tend to move in the direction of the setups to begin with, right? Isn't that amazing? All right, next up is, good morning, Luke. Do I prioritize the cash close over the settlement price in the futures market? Yes, I do. When it comes to the indices specifically, right? So ES, NQ, YM, RTY, I look at the 4 p.m. cash close. That is what I call the line in the sand, right? It's that cash close, because think about the psychology for a group of traders thinking, am I above or below? The cash close does seem to have more psychology behind whether or not we're north or south of it. So yes, I prioritize the cash close. The cash close is my line in the sand. All right, Jim asks, thinking about a sign up for Sector Secrets. If you can't catch some of the daily right. Oh, you're recommending that too. If you can't, okay. So remember, Jim, we've got that trial coming up later on. I should have that link for you all in about a week. So we have a $7 trial that we'll have going through August. Please remember, again, I do not do open trials. Trials are not available, but about once or twice a year. And I think this will be the only trial for 2023. So we have that window opening up for August. And the question is, if it can't catch some of the daily segments live, are they available for viewing later? Yes, that's really important to me that everything's available, because we have a lot of sessions in the mastery. So for as much, this is just a typical week for the mastery only. Every single day I'm with you all. Now you might think, Rog, does that mean I'm going to miss trades? Absolutely not. Unless you want to day trade with me, in which case I say, hey, set aside about an hour every morning. The alerts, including some of the day trades that I would expect could continue for this session, we do send out as alerts. So you can catch the segments live. Absolutely. Watch them if you need to review them. And of course, any trades that would come up that I believe have a shelf life, meaning at least the current session, if not overnight, will be sent out as alerts. So yeah, we've got you covered no matter what, Jim. Thanks for the question, and looking forward to seeing you in our trial. All right, thoughts on XLF and the banks this week? Great question. So we are coming out of the initial, so last week, right, we get that initial flurry of earnings from the big banks. We have some more trickling through. Bank of America is today, as you can see, before the open. PNC, Morgan, Goldman's tomorrow. USB is tomorrow, as you can see, right? And we got Travelers on Thursday of next week, or of this week, sorry, American Express, Friday of this week. So we still have some bank earnings coming out. And by the way, this is the Estimize website. This is the site that I like to use the most for understanding earnings, getting a nice heads up before the week of, which I find really not that helpful. And then also the whisper numbers. This is the best source for whisper numbers I have ever used, and that's what I like to focus on. So, what do I think about XLF? Tell you what, Robert, we've been trading really pretty aggressively names like JP Morgan. Right, we've been really aggressive on names like JP Morgan, and we've been long. This is a setup that we've had open since last week. We day traded it yesterday to the upside. I think we did this in the mastery for a 2x winner. So we really nice long call. We're in a swing trade with overnight exposure. That one, again, pushing our advantage in a relative outperformer. So I would say while I like XLF, I definitely like them. There are certain banks that are giving us some relative outperformance within that group. And that's where I'd say index sector stock. So Robert, one of the reasons we honed in on financials yesterday, and that was in Monday's day trading session. One of the reasons we honed in on financials yesterday was because we had clarity in the Dow, and frankly, we had clarity in the Russell. And one of the reasons the Dow and Russell will move together is because they have financials powering them both. Financials, specifically bank stocks, are the number one weighted sector in the Russell and in the Dow. So when I see the clarity at the top of the food chain at the index level, and then we see relative outperformance in KRE or XLF, then not only can I trade those two, I can also look at the individual stocks. So that's my thought. When I have that kind of clarity, I want to continue to press our advantage there. And we have been. And mostly in JP Morgan, And why JP Morgan? JP Morgan is the number 2 weighted stock in the XLF. It's going to behave the most like the XLF most often. And it's also going to sometimes be, let's say XLF doesn't come back to us. Let's say I don't get an exhaustive move and a trigger and an entry in XLF. JP Morgan then can be waiting in the wings and give us that opportunity. But in my mind, it's connected to the XLF, and then XLF is connected to the Dow. And that's where that cohesion, that string, that thread, that connective thread allows a futures trader to slay stocks and allows a stock trader to understand the context of the movement of their stock within the whole. Because why? High concentration weighting. It's something I talk about a lot. It's something that a lot of traders are just not aware of. And I kind of have taken it on as my personal task to say, look, gang, this is why stocks move the way they move. It's high concentration weighting. Do you know the weighting of your stock? Do you know the weighting of your sector? And then you'll get so much more clarity as to why they're doing what they're doing. But I think anyone in the mastery, anyone who's attended Charts and Coffee, you know that we look at that cohesion, index, sector, stock. We look at that boats and tide. And that's really the secret. And I say secret kind of jokingly because it's not a secret that I've kept, but it does seem to be, sadly, a secret when it comes to traders trying to understand market movement. So that's why I talk about it so darn much. All right, gang. So just like that, we are out of time. I will see you all tomorrow, same time, same station. By the way, I'll be doing the free video tonight at the Simpler Trading YouTube. So check that out. It should be posted sometime after the close today. I'll let you know what I'm looking at for a buy the dip, right? If we see some weakness, I'll talk about 60-minute or daily time frame entries. So be sure to check that out. And if we're going to continue to focus on day trading and swing trading, again, I'll cover what we've been doing so far. All right, gang, as always, caffeinate and dominate. I'll see you tomorrow. Be good to each other.